Hey everyone, Couch Investor back to our earnings video for today, and arguably the worst one yet. Not worst one in terms of the numbers that they actually reported, but worst one with regards to the market's reaction, and that's Twilio. The stock is down around 35%, which if you think of it, it's crazy. Losing 35% of your market value like that. Pretty crazy, and there are some reasons why. We're going to go over that as well. A couple of points from the earnings call. I'm going to start with that because I do think that that's probably the most important because, well, analysts weren't that excited about this report. So I want to touch on first this question right here. So 90 days ago, they talked about being cautiously optimistic on 30% growth. Now they changed that and they're talking about 15 to 25%. Obviously, he focuses here on the extreme 15% growth. So he asked what got that much worse in the macro environment in the last 90 days. So the answer here, we noticed a much broader impact as a result of macro slowdown across a variety of industries. And I think previously we called out, for example, crypto and social. I think more recently we're seeing additional impacts, for example, in retail and e-commerce, which again, 90 days ago is not that long ago. So to go from being cautiously optimistic about 30% growth, and now saying 15 to 25, which again is a very big range, does raise some questions. Now, there is also another reason why this happened. And this is also something analysts were not very happy about because they didn't know it. And that's the fact that unlike in prior years, Q3 and Q4 largely exclude a political spike because they made a decision to offboard a lot of that traffic from their platform after 2020. Obviously, right now with the midterms, that would have impacted the company positive, but they decided against that. And apparently they did not announce this beforehand. Now, I do know that the CEO is very involved in everything with regards to politics, his donations, etc. I usually don't like it. I usually don't like it when a CEO of a publicly traded company is public about, well, his political ideas and his donation, etc. Focus on your job because, well, you're responsible for shareholder value. So maybe focus on that first instead of politics. But again, that's probably another reason why there is such a weak outlook. Now, on the positive side, there is a question about, well, the amount of cash that they hold on their balance sheet, which is a good thing, right? They're not losing that much money, and they have here a significant amount. So why is holding $3.2 billion in net cash on the balance sheet the right amount to be holding, particularly if you can improve free cash flow as you improve operating profit going forward? Is there any possibility of a shared buyback program? Also, they're still reiterating their goal of being non-GAAP operating profitable in 2023. So maybe that's why they're asking this question. And the answer is here. For them, it's been important to have a fortress balance sheet, especially during economic downtimes. It's good to be more cash rich than otherwise. But they're saying here, I think you're right, that as we become more profitable and as we start to generate free cash flow, which is not the case, it's actually been going down for quite a couple of quarters, you do have different directions that you can take. And I think historically they've done M&As, but a share buyback is certainly not something I would take off the table either. Okay, they did not announce a share buyback program, but apparently it's something that they're thinking about. And if 2023 is the year that, well, they become non-GAAP operating profitable, then maybe if the stock is still cheap, that might happen. So that's a bit of a introduction to what actually happened with the quarter and the reaction of the market. Hopefully you're getting a fuller picture. Now we're going to have a look at the earnings report. But before we do so, I would really appreciate it if you hit that thumbs up button and subscribe if you have not. We've covered many companies this earnings season, so make sure to check those out. And if you want to support me and this channel, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to twilio.com/couchinvestor and make sure to check out all the other links in the pinned comment as well, some of which might actually save you some money. So first of all, of course, when you see the stock being down 35% or so, you might say, the company is not growing anymore, it's going out of business. But as you will see from this earnings report, it cannot be further from the truth. So third quarter revenue of $983 million. Q4 is expected to be around $1 billion. Back in, I believe, 2019 or so, might be mistaken, maybe 2018, but around that period, they generated that amount of revenue in 1 year. Now they're doing this in 1 quarter. So that grew 33% year over year. Organic revenue was $946 million. That's up 32% year over year. Then third quarter revenue dollar-based net expansion is 122%, which again is good, but there is a negative side of that, which is obviously it's been going down for a couple of quarters now. They have more than 280,000 active customers accounts as of the end of the quarter. And as for next quarter, well, like I said, total revenue around $1 billion. That will be up 18 to 19% year over year. Organic revenue around the same. Non-GAAP loss from operation already pretty close to being break even there. So negative 15 to negative $5 million. And non-GAAP loss per share, negative 11 to 6 cents. So not too bad, right? If you isolate everything else and just look at these numbers right here, it's not bad. And this is the trend of revenue. It has been going up each and every quarter. Of course, the growth year over year could not have stayed around the 60%. No, these were the periods of pandemic, so that obviously, pushed growth forward. Then after that, let's take Q1 2021, grew 62% year over year. Then Q1 2022, it grew another 48% over that 62%. So it's still quite nice to see big amount of growth here, even after a huge amount during the pandemic. And with regards to organic revenue growth, that grew 32% as we've seen, and we do have some more news with regard to some deals. So they signed a new 8-figure deal with a Fortune 100 property and casualty insurance provider. They also entered a new relationship with Guardian Life, a 100-year-old insurance provider with more than 29 million customers. So going back to the organic revenue trend, of course, same thing here, year over year growth is a bit less, but then again, growth was pushed forward during the pandemic. But this is where probably a lot of people had questions, and that's the dollar-based net expansion. As you can see, it was pretty high during the pandemic. After that, it has gone down quarter after quarter. And these numbers do not include any new acquisition that they've made. But still, you were at 139% in Q4 2020. Let's take Q3 2020, 137%. You're now sitting at 122%, which is obviously something that should have gone the other way around, going from 122% to 137%. But of course, now with the current macro environment, maybe that's justified, let's say. Let's see what happens in the coming quarters. If it continues to go down, then there is probably more questions to be asked. Now, internationally, the revenue mix there has increased since the pandemic, which again is fine. You are diversifying a bit from the United States, which is okay. And then another probably slide that raises some questions is the quarterly non-GAAP gross profit. Yes, it has increased quarter over quarter, dollar terms, but then gross profit growth year over year has slowed down significantly. Yes, of course, you still have this pandemic period of pushed forward growth, but this slowdown has been quite significant there. I mean, Q3 2021, you grew 63%, and now you only grew 25%. Again, 25% is not bad, but it is a big slowdown. And I mean, you can see this here. This has not even been updated yet for the recent quarter, but it's not getting any better. It's not drastic changes, but you can see here that since June 30th, 2021, free cash flow been going negative for a while. Gross profit margin going the wrong way for a while as well. And that's probably why after this quarter, well, it got hit extremely hard. Maybe 35% is a bit too much, but after everything the company management has told, well, the market, 30% growth, now only 15 to 25. How has things changed so fast? So maybe that's why there are more questions right now. More uncertainty means, well, the stock price gets hit. Could very well be that it is justified because, well, management can't execute correctly, can't maybe gather momentum. It can happen. Let's see what happens in 2023. Again, there's obviously the impact of high inflation, the macroeconomic environment, companies needing these services less and less. Of course, you have to take that into consideration. But that was also management's job to prepare for this and maybe to better communicate it to analysts, shareholders, and the overall market. So again, I do not hold Twilio personally, but I do know a lot of people that do, and I think it's fair to say that 35% hit. I mean, if we're going to look, let's go and look actually at the valuation metrics. Of course, I think there are some numbers that are still missing, but when you're looking at this, EV to sales, 2 times, price to sales in the next 12 months, 2.6 times, for a company that is still growing and that has plenty of cash on balance sheet. I mean, Ron Barron recently said this on CNBC. 1 year ago, you couldn't find a company that was cheap. Today, you can barely find any company that is expensive, which means opportunity for long-term investors. Again, it can go lower, it can always go even lower. That's about it for Twilio. Obviously, do share your thoughts down in the comments below. What did you think about this quarter? Were you disappointed? Do you think this is an opportunity? Let me know down in the comments below. And if you enjoyed this type of videos, leave it a thumbs up. If you haven't subscribed to this channel, maybe hit that subscribe button, and I'll see you all in the next one. Bye bye.